The stock market looks strong. Unemployment numbers don't seem catastrophic. Politicians say the economy is resilient. So why do millions of Americans feel like they're already living through a recession? Because this recession doesn't look like the ones we remember. There may be no dramatic market crash. No single day when the economy suddenly collapses. Instead, the pressure is happening slowly. Quietly. And for many families, painfully. Rent is taking a bigger share of monthly income. Grocery bills are still painfully high. Car payments have become a serious burden. Insurance costs keep rising. And credit card balances are following the same direction. On paper, someone may be earning more than they did 5 years ago. But in real life, that higher salary doesn't always feel like progress. Because the cost of maintaining an ordinary American lifestyle has changed. This is why economic statistics and personal experience can tell two very different stories. A strong stock market doesn't mean every family is financially healthy. Large companies can report strong profits while ordinary workers cut back on restaurants, vacations, and unnecessary purchases. The economy can look stable from the top while millions of people at the bottom feel enormous pressure. And that's exactly what makes this situation so difficult to understand. Another warning sign is debt. For years, consumers helped drive the American economy by spending. When people didn't have enough cash, credit filled the gap. Credit cards. Buy now, pay later services. Car loans. Personal loans. Debt allowed many households to maintain their lifestyles even as prices increased. But debt doesn't eliminate financial pressure. It delays it. Eventually, the monthly payments become larger. Interest charges grow. And consumers are forced to reduce spending. That's when businesses begin to feel the pain. A restaurant notices fewer customers. A retailer sees weaker sales. A small business delays hiring. A company freezes new positions. Then layoffs begin quietly. Not necessarily tens of thousands at once. Maybe a few hundred here. A few thousand there. Departments disappear. Open jobs are never filled. Contract workers are cut. Hours are reduced. This is how economic weakness can spread without creating one dramatic headline. Young Americans may feel this pressure first. Many are already dealing with high rent, student debt, expensive cars, and limited savings. Buying a home feels impossible. Starting a family feels financially risky. Even people with decent salaries often feel one emergency away from serious trouble. Older Americans face a different problem. Higher living costs can destroy retirement budgets. A financial plan that worked 5 years ago may no longer feel sufficient today. Food costs more. Insurance costs more. Healthcare costs more. The monthly budget becomes tighter. So if millions of people are struggling, why doesn't everyone simply call it a recession? Because the word recession is politically and economically powerful. Governments don't want panic. Businesses don't want consumers to stop spending. Investors don't want fear to spread through financial markets. And consumers themselves don't want to believe a serious downturn is happening. But the economy doesn't need permission to slow down. Sometimes the most dangerous economic weakness is the kind people refuse to recognize. The question isn't whether every economic indicator says recession. The real question is what is happening inside American households. Are people saving more? Or using more debt? Are families becoming financially stronger? Or simply surviving from paycheck to paycheck? Are consumers spending because they feel confident? Or because credit is the only way to maintain their lifestyle? Those questions may reveal more than a single economic report. America may not be experiencing the kind of recession shown in history books. But for millions of people, the financial pressure already feels very real. And maybe that's the recession nobody wants to admit.